Welcome to Tesla Daily News podcast on January 6th, 2026. Today, we're breaking down the biggest stock-moving Tesla headlines: a sharp drop in deliveries, BYD taking the global EV crown, rising Robotaxi skepticism, intensifying competition in Europe, and the newest signals from Elon Musk's political orbit. First up, Tesla's fourth quarter deliveries fell hard, and the numbers are the story. Tesla reported fourth quarter 2025 deliveries of 418,227 vehicles. That's down about 16% year over year. Wall Street was looking for roughly 426,000, so the print came in below expectations. Context here is simple. For a company valued like a growth story, deliveries are still the most immediate demand signal investors trade. Details: the mix still heavily skews to Model 3 and Model Y at 406,585 units, roughly 97% of deliveries. Higher-priced Model S, Model X, and Cybertruck combined were 11,642. Impact: a year-over-year decline plus a miss versus consensus typically pressures sentiment on near-term revenue and, more importantly, automotive gross margin. When deliveries fall, fixed costs and factory utilization become the hidden margin risk. It also raises the question of whether Tesla is stabilizing demand through pricing and incentives, which can protect volume but squeeze profitability. Takeaway: investors should watch two things next: whether Tesla signals further pricing moves, and whether margins can hold up if the volume reset persists into early 2026. Second story: BYD has now passed Tesla in global battery electric sales, and that changes the narrative. Reports out of Asia say BYD sold about 2,260,000 battery electric vehicles in 2025, up roughly 28% year over year. Tesla's reported 2025 deliveries were about 1,640,000, down from around 1,790,000 in 2024. Context: Tesla's premium valuation has always leaned on leadership, scale, and technology. Losing the top spot doesn't automatically crush the business, but it matters for the market's growth perception. Details: BYD's growth is powered by aggressive pricing, broad model coverage, and strength in China and expanding exports. Meanwhile, Tesla's year-over-year delivery decline suggests that competition and policy shifts are biting, especially where incentives fade. Impact: this can hit Tesla stock through multiple channels. One is analyst narrative. Category leader language becomes harder to defend. Another is forward growth assumptions, which feed directly into valuation models. And a third is pricing pressure. If BYD keeps pushing down cost and price, Tesla may have to choose between margin and volume more often. Takeaway: the key investor question is not whether Tesla is number one in units, but whether Tesla can defend pricing power and expand profit per vehicle through software, autonomy, and services. Third, Robotaxi is becoming the valuation battleground, and skepticism is rising. One widely circulated investor critique, attributed to Gary Black, argues Tesla could fall behind in Robotaxi if it can't meet timelines for truly driverless operation. Context: at today's valuation framework, many bulls are underwriting autonomy upside. If the autonomy timeline slips, Tesla can start trading more like an automaker than an AI platform. Details: the core issue isn't whether full self-driving is improving. It's whether Tesla can move from advanced driver assistance to repeatable, regulated, no-driver commercial service at scale. Impact: Robotaxi expectations affect Tesla's multiple. When confidence rises, the stock can expand even if car margins compress. When confidence falls, you can see the opposite. Investors refocus on deliveries, pricing, and traditional auto margins. Takeaway: listen for two signals in coming updates: whether Tesla discusses any concrete expansion path for unsupervised driving, and whether there's any regulatory or operational milestone that looks measurable, not just aspirational. Fourth, competition in Europe is heating up, and the price-value gap is tightening. French tech and auto outlets are highlighting Chinese entrants like XPeng pushing premium-sized sedans into Europe at prices positioned closer to a Model 3 than a Model S, separately. Broader industry coverage points to a packed 2026 pipeline of new EVs in the UK and Europe. Context: Europe has been one of Tesla's key profit pools, but it's also a market where buyers cross-shop heavily and incentives, financing rates, and brand positioning matter. Details: the competitive playbook is clear: offer longer range, faster charging, or larger cabins at a similar monthly payment. Even if Tesla maintains strong brand equity, the market becomes more promotional. Impact: increased competition can reduce Tesla's unit growth and force more pricing action, especially for Model 3 and Model Y. That has direct consequences for revenue growth and automotive gross margin, and it can shape analyst revisions. Takeaway: if you're tracking Tesla, Watch European registration trends and inventory days. Those are often early indicators of whether Tesla is winning on demand or defending share through discounts. Fifth, Elon Musk's political optics are back in the Tesla conversation. Business and political coverage says Elon Musk had dinner with President Donald Trump and First Lady Melania Trump at Mar-a-Lago, a visible moment after prior public friction. Context. Investors care because Tesla is exposed to regulation, EV incentives, trade policy, safety investigations, and autonomy rules. Political proximity can be viewed as either a risk or a potential advantage depending on policy direction. Details. There's no direct policy announcement attached to a dinner, but markets often trade the option value of access and influence. Impact. In the short term, this kind of headline can increase volatility and amplify narrative-driven moves, especially when the core fundamentals, like deliveries, are under pressure. In the medium term, the real stock impact depends on tangible policy outcomes, tax credits, tariffs, charging standards, and autonomous driving regulation. Takeaway. Treat this as a sentiment and volatility factor until you see actual policy proposals that affect demand, costs, or autonomy timelines. Sixth, a small but practical Tesla data point that matters for customer experience. A recent test highlighted that a 2026 Tesla Model 3 can still travel some distance after the display shows 0% battery. Context. Range confidence is a major adoption driver in EVs. Customer trust reduces returns, increases satisfaction, and helps word of mouth. Details. While exact remaining distance can vary widely with speed, temperature, and battery condition, the broader point is that Tesla's battery management leaves a buffer. Impact. This is not a direct earnings driver, but it supports the brand's usability narrative, which matters when competition is catching up on specs. Takeaway. As the EV field crowds, the small ownership details, like charging experience, reliability, and software polish, become more important in defending demand. Let's wrap it up. Today's big themes are demand and valuation. Deliveries are down. BYD is now ahead in global battery electric volume, and the market is increasingly forcing Tesla back to the key question: is this primarily an automaker with cyclical margins, or an autonomy and robotics platform that deserves a tech multiple? For tomorrow, keep an eye out for follow-through commentary on delivery trends, any analyst note waves adjusting forecasts or price targets, and any concrete Robotaxi milestones that can anchor the autonomy debate. If you want Tesla news with an investor lens every day, subscribe to Tesla Daily News Podcast and follow us for daily updates.